Hi guys, I hope all of you are doing well. This is your Nifty Guy. Welcome to today's episode of Decoding Nifty with me. This is the series where we analyze and decode Nifty on multiple time frames so that we can trade the following day with much more confidence and clarity and that we are ready with a plan. In case if you guys like the way I put out these daily videos for you guys and the way I explain price action setups along with the trades that were taken with the rest of the variables combined like SL, trailing SL, where did I take profits or and everything in the extreme details of the trade. And we plan the trade for the following day. Please like the video, subscribe to the channel, share the channel with your trading friends and community, and as well as do not forget to put down anything that you might have to say in the comments box, be it feedback or be it criticism. I'm open to everything. Right. In today's video, at the end, I'll also cover an expiry special setup because tomorrow is the monthly expiry, the June month expiry, and I'll explain once again. I have covered it briefly in one of the previous videos, but I'll explain it once again. So be with me till the very end. I'm sure you will be taking a valuable lesson home today. First, we'll start with what we had planned yesterday versus what happened in the market today, and how did we play it, right? So yesterday, what I had told was it was a very bad closing on a daily time frame. But our analysis on the 75 minutes time frame with which we had drawn this particular support zone proved out to be extremely right? Because this was the entire up move because the new high was created, and this is the zone from where we had anticipated that the market is kind of taking support and can reverse from here. And that is exactly what happened today. Markets opened with a gap up, and the gap up was sustained beautifully. If yesterday's candle was ugly, today's candle is damn beautiful. We had planned to create a long above this particular high and short the markets obviously below this only. Today was an extremely volatile session with market only giving me one particular trade. And if we see, look at the market structure again, see, as I always ask you guys to focus on the market structure. So market was in a constant higher high, higher lows, where at this particular point, market was kind of forming a consolidation area around here. And if we look at the kind of the what is the nature of the market on that particular day, we can look at again, that is something which I tell you guys about reading what is going on behind the scenes. So for every fall that was coming, it was immediately getting reversed, right? You can look at the bullishness that was in the market. Apparently, if you try to read what is going on behind the scenes, and if you can see the kind of fall that was coming, immediately getting reversed with a new high that was being created. Again, a fall was coming, immediately getting bought into, right? So every dip was getting bought into. Now, does that mean that we are simply gonna buy every dip? No, absolutely not. Because in the stock market, anything can happen anytime, and we cannot trade without the market committing to us first, right? So that is what I always say, let the markets commit to you before you commit to the market. The only trade that I got was at the break of this particular high around here, which gave a good and decent momentum. Otherwise, throughout the day, my personal observation was that market was lacking momentum in terms of the prices in the option. They were not moving in sync as the spot was moving, and that is simply because of the VIX, which was in negative today, right? And the reason why I took a trade on the breakout of this particular candle was this I felt was a liquidity trap. Market went and gave us a closing below the last particular two swings, inviting fresh sellers, and then immediately reversed. Then came another round of selling, and once these sellers were extinguished or exhausted or taken out by this move, we could see a very good of move on the in our favor on the long side, and that is exactly why I plan to enter at this particular break of this particular high, and this gave a good momentum, right? And you can see there's another point of confidence. You can look at this thing as a head and shoulder pattern, whatever you might want to call it, that this is the left shoulder, this is the head, this is the right shoulder, and the break of the neckline you're entering. Or I simply look at it in a market structure kind of a way. Overall, this was the major swing which was protected. The structure did not change. These were the last two minor swings that were created in the sideways consolidation, which got taken out with a closing. But immediately look at the bullish candle around here and the bullish move around here. Again, just from below this zone from where this low was created, again, market gave us two small pullback. And then again, this was, and then this the up move which was coming, this had protected this particular low, and that is the reason I entered at the break of this particular high with SL around here. I exited around this candle, right? I was waiting for this momentum to continue, but then because a double top had formed here and been confirmed when this low was taken out, I exited in this particular candle. And if you can see again, this particular fall also which came down was equally met with a good move on the upside. However, the same was not being reflected in the option prices. Again, this big fall came down, which was a big red candle taking out, kind of creating a very big double top, but then there was no follow through, right? Say, for example, if you would have shorted the markets at this particular double top formation, you would have been trapped. So that is the reason why I always say let the markets commit to you before you commit to the market. And the good thing that has happened today is that market has moved in two zones, right? First, the market moved, consolidated around this area, gave this up move, consolidated around this area, closed almost near the highs. So overall, like I said, today's on a this was the only trade that I had taken, and it was a good trade. This was the only trade that gave some momentum. Post this particular trade, also I was keenly observing the prices of in the money calls and puts. Although the puts were decaying whenever there's a move coming, the calls were not moving in proportion to the spot prices. So that is something which I always keep a note of. Now, if we look at a daily time frame, we are near the highs of this particular zone which is there. We can also draw this particular trend line. This is actually a channel which was briefly broken down below this. So we are right now near the high, so I'll only be concentrating on this particular trend line. For tomorrow, I will keep the plan of action very, very simple. Market opens flat, gives us a breakout, pullback. We enter a long position above today's high. Above this particular high or above this particular trend line crossing, I will be adding more quantities. In case of the straight going in this way, in case if we see a gap down opening, I believe the market will again be a little volatile and I will avoid trading till the market settles in. In case of a gap up opening, again, like today, we'll need to look at the price action and then plan our trades. It might be that we might not get a trade right at the start of the day, but as the day progresses, we might be able to plan a trade based on the price action. So the most favorable trade or opening will be around the will be a flat opening, and that we can exactly plan a very simple and trade beautiful trade which we can plan. For a short trade, I will wait for today's low to be taken out. Until unless today's low is taken out, today's low was protected throughout the day. I am not interested in taking any short entries. We can also remove this particular trend line zone now because this particular zone has already done its job. Now, this will not be of importance to us. And tomorrow is the monthly expiry. Once again, a sign of or a word of caution from my side. Anybody who is trading Nifty options tomorrow and is into option buying, just like me, please shift to the next weekly option, right? That will help you save up your capital. Although you might have to pay slightly more premium to take in your positions, but if your view and your conviction is right, you will still be ending up making more money, if not less, the same money, if not less, right? That you would be doing by trading tomorrow's options. Tomorrow being the monthly expiry, please be careful in the market. There are wild moves which are experienced in the monthly expiries mostly, and you should take care of that. Plus shift to the next week's expiry options. That is what is my suggestion. Now, anybody who is actually keen on trading in tomorrow's weekly expiry or the monthly expiry option in tomorrow's option, I take a particular trade, or basically, not necessarily I take, but I look for a particular trade setup on the weekly as well as the monthly expiries. More so on the monthly expiries. The reason because when there is an option contract which is expiring on that particular day and there is a high OI buildup on some of the strike prices, what we can say is we need to wait for conclusive evidence for people to get trapped. I'll come to that and I'll show it to you where I exactly look for it. And that is something which, if you see, you can play a hero zero based on your risk appetite. And that is the only hero zero trades that I take. No other hero zero trades for me, only on the expiries, and that to post 2 p.m., not before that, when the option prices are almost nearing the end of their expiration, near the expiry. That is when I play this particular move. So what I do is I open up the open interest chart on Sensible, and I put out. So this is the 26th June expiry, which is selected for Nifty, and I'll select the open interest, right? We need to look at the open interest and we need to toggle the switch on, which is show OI change. Now I select this as the last 5 minutes. I am only interested in what is the OI change happening in the last 5 minutes. And if you see around 25,200, this is how I'm explaining how to read this. On the 25,200 strike price, the put OI at 3:24 p.m. was 1.73 CR, and at 3:30 it was 1.58 CR. So there were around minus 15.16 lakh people who had exited this particular contract, and that is the reason you see this particular void at the top. And on the call side, you see minus 2.88 lakhs. So that is the amount of people who would have exited this particular strike price. And in case of an addition, there will be a grayed out area that will be seen again. There are no much addition in the last 5 minutes around here, but in case if we can see just for, yeah. So if I'm just looking at this particular time period, so this shows addition, and the blank side shows that there are people who have exited, right? So this is what I want you to look at post 2 p.m. on the open interest, and you see that where is the market trading, which is the nearest call or put option which has a very heavy call or put writing. Say, for example, this remains the scenario around 2 p.m. tomorrow, and if market is trading very close to 25,200, right? And if, say, for example, this is the high open interest of almost 1.73 CR on the put side. And once the prices start moving below 25,200, all these people, they will be seeing some losses, and their stop losses will be triggering, leading to a move on the downside in the market, which you can capitalize by buying some in the money. Even in this case, I will stick to buying in the money puts, and this is the only hero zero trades that I can take. I actually do not even let them go to zero. In case if I see the trade is working perfectly well, good for me. In case if it is not working, that's a quick entry and quick exit for me. But mostly, if you will have to, maybe if so, this is a new concept for you, please observe it for a couple of expiries before actually going ahead and trading it, right? So on rest of the days, I do not even open the open interest chart because open interest can change in the uh, matter of seconds or minutes, right? Because based on the position that people are taking or exiting, the open interest changes. And that is the reason I do not take this into consideration for my day-to-day trading. But it is only on the expiry days when I see where the market is. And in case if some particular strike price which has heavy call or put writing, those writers, if they are getting scared, we can see some good short covering or long unwinding moves, right? This is the only expiry setup that I use, in which I trade in the current week's expiry, and that too in the money. And those are quick trades, right? Do not hold on to those trades for very long. Uh, if you are lucky and you get that short covering or the long unwinding, you'll get very good returns on your investment. But again, keep the quantities low. That is what I will suggest. And in case if this is something that is new for you, my sincere suggestion would be to uh, watch it, observe it for at least 3 to 4 expiries before actually going ahead and trading based on this, right? You are here for the long run, not for a short gamble, so plan it accordingly. I am also planning some live sessions, but that is after I get some significant amount of subscribers on the channel, wherein I can actually show you guys in the live market what exactly am I looking at. Say, for example, we are trading expiry. I can plan to come live during the market hours, and then I can show you what exactly are we supposed to look at and how do we look at. So, in case if you have still not subscribed, please hit that subscribe button. I will only be going live post 1,000 subscribers minimum. So now it's all on up to you guys. And yeah, tomorrow's plan of action will be simple and it's expiry. Once again, word of caution, stay safe. And I'll see you guys again tomorrow. post the market. This is your Nifty Guy signing off for today. Have a good day. Thank you so much, guys.